This is Paul Kuntz with RedChip Companies. I want to thank everyone for joining today's event with NioCorp, which trades on the Nasdaq under the ticker NB. With us today, we have Mark Smith, Chairman, President, and CEO of NioCorp, Scott Honan, Chief Operating Officer and President of Elk Resources, Jim Sims, Chief Communications Officer, and Alex Guthrie, Director of Investor Relations. We will begin with a brief presentation in a moment, and then we'll open up the event to questions. I will keep everyone's lines muted throughout the presentation. Users may reach the team at any time by clicking the Q&A button at the bottom of the Zoom window and typing in their question. Before we begin, please allow me to read the Safe Harbor statement. This call may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking, and of course, forward-looking statements involves risks and uncertainties. I will now turn the call over to NioCorp team. Please go ahead.
Thank you very much, and thank you everybody for joining us today. It's all part of our effort to make sure that we keep our shareholders and the market up to speed on what's happening at NioCorp, and there certainly are a lot of things happening at NioCorp right now. As you can see in the upper left-hand side, I'll just do some preliminary background materials to start with here, but the upper left-hand corner here, you can see that NioCorp is all about building a $1.2 billion below ground or underground mine and surface processing facility in the southeast corner of the state of Nebraska. And our minerals that we'll be producing involve niobium, titanium, scandium, and the magnetic rare earth oxides. And just to put that in context a little bit, let's keep in mind that we import 100% of the niobium we need in the United States today. We import about 85% of the titanium we need in the United States today. We import 100% of the scandium we need in the United States today. And we import about 95+% of the neodymium, praseodymium oxide, and 100% of the dysprosium and terbium oxide. So it's very important that as part of the onshoring effort that the United States is going through today, that this mine get up and running. We are NioCorp, and the lower left-hand side here in the blue, you can get a little bit of company information. We are traded on the Nasdaq, ticker symbol NB. You can see some of the market cap, total number of shares outstanding, et cetera. And the very bottom there is a point that we're pretty proud of. We have zero debt and zero convertible debt on our balance sheet as of today. In terms of company highlights, I'm going to say this more than once, but we have been able to secure greater than $370 million in funding so far this year, and that's in the form of equity funding as well as warrant conversion and use of our SEPA program. We do have all of our permits in hand, so once the financing is in place, we can start construction immediately. One of the other really important points here is the second one from the bottom, and that is that our team has actually produced the minerals that we're going to be producing here at the Elk Creek facility. That may be from other locations around the world, but we often hear in articles or conferences that the United States just simply doesn't have the experience to produce these minerals anymore, and we would like to challenge that. We think our team not only has the hands-on experience, but we have the institutional knowledge to make that happen. So we're pretty proud of that fact. Next slide, Jim. Here's the minerals that we'll be producing. Again, ferroniobium, scandium oxide, titanium in either tetrachloride or TiO2 form, neodymium, praseodymium oxide, that's put together, the two minerals, and then dysprosium oxide and terbium oxide. You can see that red banner across the middle emphasizing the fact that these are all very, very highly dependent on foreign sources to keep the United States running. Next slide. This is an important point that came out about 4 weeks ago, but the USGS, United States Geological Survey, was asked by the White House to do a criticality analysis of the 54 critical minerals for the United States. They did that work, they published that work, And as we suspected anyway, but it certainly came out true blue, niobium, dysprosium, and terbium are considered among the highest priority critical minerals. And in fact, niobium was considered the second highest threat when it comes to the United States gross domestic product, or GDP. It would have greater than $10 billion a year to a negative hit to the US GDP if we were not able to import those materials today. So a very interesting finding, one that didn't surprise us at all, but I think niobium is continuing to get more and more press, much like the rare earths today. Next slide. Here's where we are on contracts. These are actual enforceable offtake agreements. These aren't LOIs, they're not MOUs. These are binding and they're enforceable offtake agreements. So we're continuing to work on that. And in terms of additional milestones that you'll hear the company meeting, we would hope to see some additional enforceable offtake agreements between now and hopefully the end of the year. Next slide, Jim. In terms of just a simplified version of the project financing, we start on the right-hand side with the upfront CapEx, $1.2 billion. We know from the communications in writing that we've gotten from the U.S. Export-Import Bank that they're willing to fund on a 65% debt to equity ratio, that 1.2 billion, which means that we can get $780 million in debt financing for U.S. Export-Import Bank. And we'll talk about that in more detail in just a minute. That leaves $420 million of additional money that has to be raised in one form or another. And if we very quickly go to the next slide, we'll show you where we are on that. On the left-hand side in the green box, you can see that we've raised almost $371 million to date in 2025. The complicated graph on the right that you see is just really a message to our shareholders that we are trying hard to do the right thing for our shareholders. And what this slide is showing us is that the offering size, as we started in January of 2025, and our last raise was October 15th, the size of each of those offerings has increased. The share price has increased as each of these offerings was made, and the discount to the then existing market price is also getting lower and lower every time. These are three things that you want to watch for. We're very happy that we've been able to achieve this so far, and we'll continue to do our best to make sure these trends are going in the right direction. Next slide. With that money in the bank, we're not just letting it sit there, we're actually trying to utilize it and do several project advancement activities, utilizing that money and ensuring that once we do have all the financing in place and the actual construction of the project starts, we will have a bunch of these activities done and out of the way, which just keeps us on schedule and on budget, with that much more de-risking involved. So we're finalizing all the property purchases. We're hoping to have a good announcement about the final property purchases, hopefully within this week or next week. That will allow us to say that we have secured, roughly 640 acres or 1 square mile, which is what we need for our 38-year mine life and the above ground facilities. We've finished up our mineral reserve uplift drilling. The rigs have been demobilized, and we're now just waiting for the analysis to come out for all of the 70, it's over 7,000 samples of diamond core that have been sent into the labs. And Scott can talk about this more in just a little bit. But all these other things as well, and site preparation, early works construction would be two that I would point out as well. Getting the property prepared for the construction activity, maybe getting our portal put into the ground. Those are things that just keep us ahead of the game and make sure that as the full construction project starts, we're on top of it and we can tell our shareholders and the market that we're on budget and on time. Next slide. So we got a $10 million grant from the Department of War, and the first two items here, items 1 and 2, are all about technical work that the U.S. Export-Import Bank asked us to do to further our debt application process. And it was good to see that the Department of War provided this $10 million of funding and allowed us to take on items 1 and 2. So we already talked about the drilling activity, and we'll have Scott provide more detail in a minute. We also started some detailed feasibility study level engineering on our new process flow diagram that started the last week in April. It's proceeding very well right now. We're looking forward to hopefully some good results on that as early as the end of this calendar year. Items 3 and 4 are pretty exciting to the company, and you've seen some press releases last week in particular relative to our activities in the Scandium area. The Department of War really views Scandium as an important and critical mineral for them right now, and that's an element that we do import 100% into the country today. So they've asked us to take a look at how can we produce Scandium metal in country. That is not done today. So we are undertaking that effort. We hope to have our first Scandium metal production as early as November, which would be very quick now. We're also, and we just announced last week, the aerospace prime is Lockheed Martin, and we are working on an aluminum Scandium alloy technology for advanced fighter jets, both from a threat detection envelope and a structural capability in the F-35 and F-22. So very, very exciting, and we're thrilled to be working with a company like Lockheed. Next slide. So we'd mentioned we're working on the EXIM loan process, $780 million. We are very far down the road with EXIM, and once the government gets up and running again, hopefully we can sit down and finalize this process with EXIM in the shortest amount of time possible. We were supposed to have a meeting with them last week to go over things that are in the second checked item here, which is the preliminary project letter and the preliminary indicative term sheet. We have a report card that we put together and have shared with EXIM from time to time to let them know where we are on the various activities that they wanted us to undertake as part of securing this loan. And it's really very gratifying to me to see that report card and see how much work has been concluded with very little left now to get to the finish line with EXIM. So all that is going well. I think our relationship with EXIM remains strong. And of course, having an advisor like JP Morgan certainly helps the process tremendously. So more to come on that. And I think it won't surprise anybody if I say that probably one of the most important news events that will happen in the history of the company will be when we can say that we have a binding agreement with EXIM. So obviously that is a huge focus of all of our activities today, probably our number 1 priority. Next slide. We have the capabilities of bringing other export credit agencies in as well. The UK Export Finance Group and the German Untied Loan Program. The German loan program is actually probably more feasible at this point in time because we actually have an offtake agreement with a German customer. And that is what you need to be eligible for that program. So we'll be pushing that with the UFK program here, probably meeting with them face-to-face sometime in December. We've had a couple of different face-to-face meetings with the UK Export Finance Group. They're very interested in helping fund this project as well. But we do need to have an offtake agreement to some UK company, and that is not in place yet. But we are continuing to work with multiple companies on potential offtake, not just of Scandium, but maybe some other of our products as well. So more news to come on that front as well. But again, very, very excited to have this level of interest being expressed to us by all these export credit agencies and getting a multi-country view on how we're doing things. Next slide. We've covered this before, so I won't spend a lot of time on it. This is from our 2022 feasibility study. We're getting very close now, probably within 5 to 6 months, we should have the updated feasibility study done, and that will allow us to provide updated economic model highlights to you. We're looking forward to that because we know when you add the magnetic rare earths as additional revenue, when you increase the amount of titanium that you're going to produce by 6 times, you increase your niobium recovery by 4 or 5%. That EBITDA number on the upper right-hand side is going to go up, which also means that your pre-tax NPV number on the upper left-hand side is going to go up. So we're very anxious to get that technical work done and be able to report to the market and our shareholders what the updated economic model will look like. Next slide. Here's our team, and you can see we've added a couple of faces here. So you've got the usual suspects with Mark, Scott, Neil, and Jim. We've been working on this project for 11 to 12 years between all of us. We've added Ernest Cleve as of August of this year. Ernest is a very seasoned finance professional and really business professional, and has already added tremendous value to the company and multiple things that he's working on, including that Scandium supply chain that we're very interested in putting together. We just added David Ham. He's our new general counsel, tremendous individual. I think as the market gets to know him and our shareholders get to know him, you'll very quickly find out why we wanted David on our team. Very high energy, very smart, just really a hard worker and as honest as they come. So he fits our team very, very well. And I think that basically concludes everything for a presentation. And I think we had some questions. How are we going to do the questions?
Yes, thank you, Mark. We are now going to open up the webinar to questions. Our audience, you can type in your questions using the Q&A tool. Please do not use the raise hand tool. We will not be taking spoken questions today. Our first question, how does the new collaboration with Lockheed Martin Skunk Works accelerate aluminum scandium commercialization and confirm Elk Creek's role in U.S. defense?
It's a great question, and I think just the fact that we announced the study shows that there are actual applications, new applications that involve scandium, and this is what we've been trying to tell the market for quite a while. There is a tremendous amount of latent demand for scandium out there, and NioCorp has put it upon ourselves to go out and find those applications and encourage companies like Lockheed to move forward with these new technologies. I can't get into too much of the technology for obvious reasons, but this is a technology that Lockheed has been working on for a period of time. The Department of War is about as excited as I've seen them in a long time when it comes to a new technology, and they're pushing Lockheed to have this as a ready to install technology within 18 to 24 months, which is that is equivalent to what we kind of jokingly call Trump time right now. That is very, very fast for the Department of War to install a new technology that quickly, and again just speaks volumes to how important scandium can be if we have a good supply. And NioCorp will be producing about 100 tons of that per year. That's about anywhere from 3 to 4 times more than what is produced in the world today. But the number of latent technologies or latent demand with utilizing scandium technologies that are just sitting on the bookshelf getting dusty today is unbelievable, and we're going to do our best to unlock as many of those technologies as possible.
Thank you, Mark. And when will Defense Production Act Title III milestones begin converting into cash reimbursements and potential follow-on government work?
I'll be happy to answer that, although I think Jim can answer that as well. Why don't we have a different voice on the line here?
Good, thanks, Mark. The answer is pretty simple. They're already being reimbursed as we speak, and so that process will continue as we walk through the deliverables in the program, but that process is going very well.
Thank you, Jim. Our next question, being that all required land and mineral rights are secured, how quickly can you break ground after financing, and what are the first on-site steps?
Sure, Mark. I think we're certainly anxious to deploy some of the capital that we've raised so far this year. And as we look forward to continued capital raises, we're already thinking and working towards those groundbreaking type events. So I think, subject to our board's approval, the kind of things that we might see in the near future include things like clearing and grading at the site, getting a start on the mine portal, which Mark alluded to during his comments earlier in the webinar, and just getting a start on things like utilities that we need to eventually run the operation, and pushing forward with operational permitting and hiring staff. I'm pretty excited because there's a whole universe of things that we can get working on now that we have some money in the treasury.
Thank you, Scott. And our next question, what is the status of the drilling campaign you have been conducting in Nebraska?
Hand that one over to Scott, because this is it's too exciting for me not to let him talk about.
But I'm pleased to report that the drilling is complete, and we actually finished that up on October 9th. And that's a program that in the field went particularly well. We actually did an evaluation in late July and determined that because we were doing pretty well with budget and schedule, we could add an additional 4 holes to the resource drilling program. So, the original impetus for this program was to convert some of our indicated resources to measured, and thus convert some of our probable reserves to proven. But we had an opportunity here to add some additional holes to the program, with the expectation that if we get good results there, we could further increase the size of our resource. And we also added some geomechanical work to the program, so that when we actually establish our portal and the ramps down to the mining area, we have some good knowledge about the rock we're going to be going through. So that program went very well. Right now, if you were to go to the site, you'd see the field team and the geology team really wrapping up work for the field season. We're doing some resampling of some historic core stored on site. We expect that work to be done in early November. And I think the other thing I would say is that we had some very clever geologists design our field program this year. It really was an adaptive program. That is, that as we got results from hole number 1, we would use those results to inform the location and characteristics of hole number 2. So we use that adaptive approach through the program, and I'm pretty sure that we're going to get a good result out of this drilling at the end of the day.
Thank you, Scott. And another question we have, with regard to the land position that the company has, is there room for future expansion of the mine?
Simple answer is yes. Scott, you want to get into the details there?
Sure. At this point, we have all the land that we need for construction and initial operations. We are pursuing some additional land acquisition, just really to optimize our land position and allow for some operational flexibility. I think that we focus on one section of land, which in southeast Nebraska is a parcel that's 640 acres, basically 1 mile on a side in a square form. And the challenge that I've put before the engineering and design teams is to make the best use of that land possible. So let's take a look and see how many operational years we can get out of that land position. Over and above that, we do have options to purchase additional land in the area, an additional 970 acres, so that, if we get something like 20, 30 years of operational life out of our main parcel of land, we've got plenty of room to expand in the future.
Thank you, Scott. And our next question, regarding the feasibility study you are working to update, how is that process going?
Scott, I'll have you answer that again. You've got all the engineers working hard.
Well, I will say the work is moving along nicely. Really, if you were to take a snapshot of where we're at in time right now, most of the effort to this point has been just in engineering design, updating designs from our 2022 basis, getting new features such as our twin decline and railveyor system, designed and tied into the surface plant. And then taking what we learned from our demonstration plant and further refining our production process and the design of the surface plant. So a lot of design engineering work there that is now transitioning into the cost estimating part. So once everything's designed, you have to figure out how much it's all going to cost. all of that work is moving along nicely. I would say, just looking at all the different work streams that are running in parallel right now, we probably have a critical path that runs through getting all of our assays complete from this drilling program that just finished, getting all those assays into an assay database, updating our mineral resource, and thus updating our mineral reserve. And then at the end of that, making sure that that we have an adequate mine design to mine all of those mineral reserves. So working with a lot of partners on this, the work is going extremely well, and I hope to have some results to report on all of that work here very soon.
Thank you, Scott. And our next question, how is the process for securing additional offtake agreements going?
I'll take that one. It's going, and we're constantly working on this. This is one of the things that is absolutely critical in terms of getting debt financing. It doesn't hurt with equity financing either, but it's absolutely critical for debt financing. So we've got multiple avenues, literally with every product that we're undertaking now, and it's going to be first come, first serve at the end of the day. But as the world tightens, so to speak, with a lot of these critical and strategic minerals and exports are being halted out of some countries, it certainly is making people rethink their supply chains, rethink where they're securing their minerals from, and if nothing else, they want alternatives to what they've had previously. So those are all tailwinds helping us on the offtake side. But I do think that we'll have these would be some pretty good milestones that shareholders and the market can expect to hear about in the next few months here.
Great. Thank you, Mark.
Yep.
And our next question, how are discussions with the U.S. Export-Import Bank, UK Export Finance, and other lenders progressing, and what financing mix best limits dilution ahead of the final investment decision?
Yeah, so I think I talked to that to some degree already. All those discussions are going very well. Unfortunately, the U.S. government is shut down right now, and so we were not able to do a meeting with EXIM last week that we were supposed to. However, we do have meetings that are being set up in December with the UK Export Finance Group. They're actually going to be in the United States, and they asked if we could meet with them while they're over here in the United States. So that's the level of relationship that we're starting to build with all of these export credit agencies. I think at the end of the day, what we'll see is a very good blend of those three export credit agencies, and that just kind of helps each of them feel more comfortable. And all I mean there is that instead of EXIM assuming $780 million in a debt package, they could end up assuming about 380 million, with UK Export Finance Group assuming 200, and the German government program assuming another 200. It just makes everybody relax a little bit more when their total amount of exposure goes down to those levels. So we're encouraged by what's happening. We just need to get the government back to work.
Great. Thank you, Mark. And our next question, what is the roadmap to scale aluminum scandium from defense prototypes into automotive and aerospace production, including master alloy partnerships and customer qualifications?
Yeah, and let me go back, Paul, just on that last question. I didn't answer the question of dilution. And I think the simple answer there is everybody can see that we're looking at export credit agency finance at about a 65% level. That addresses dilution by definition. And what we're otherwise doing then is raising equity in the form of common shares. And we're trying to get the highest price possible in those offerings. That also minimizes dilution. So hopefully our shareholders in the market can see that we do care about things like dilution, but we also care about increasing the value of the company constantly. And I think that we're seeing some good success in that regard. So then going to the scandium issue in terms of going from defense prototype into more of a commercial application. I think the key there to me is, in order to service Lockheed the way that they're going to need to be serviced, we're going to have to establish many parts of the supply chain for scandium aluminum. And that's going to mean you're going to have a mine that produces scandium oxide. That's what we're building at NioCorp. You're then going to have to take that oxide and either convert it to metal, which we're doing with our DoD grant, or convert it straight into an aluminum scandium master alloy. And we have a couple of different technologies that are pretty exciting to us in that regard. We hope to clamp down on one of those pretty quick and start moving that more into maybe our ownership or a partnership or something where we have more control over the production of the master alloy, and then ultimately be able to produce the scandium aluminum alloy itself at the 0.1 or 0.2% scandium levels. We just announced in combination with IBC Advanced Alloys that they had done their first pour with using master alloy and aluminum to make the actual scandium aluminum alloy that would be used by folks like Lockheed Martin. And so you can see there, we are moving down the road, making sure that we have an onshore scandium aluminum supply chain. And based on the 2 press releases last week, we're seeing some pretty good success in that regard. As that supply chain is put together and it's able to service companies like Lockheed Martin, you will get the rest of the commercial applications for scandium aluminum to pay more attention to this as well. There's not a whole lot of reason for people to pay attention to it right now when the supply chain doesn't exist inside the country. So our speed at putting this together is going to dictate how much commercial attention is paid to the scandium aluminum arena. And I got to say that I'm pretty excited about the inquiries that we're getting from people as a result of the announcements we made last week. So I think more good news to come on all of those fronts, Paul.
Great. Thank you, Mark. And our next question, do you anticipate down the road issuing dividends to shareholders?
No, that's a little ways out because we still have to finalize financing. We have to finalize detailed engineering. We have to build a mine, and we have to make it operational, and then we need to pay debts back. But certainly, if you take a look at the average EBITDA, even on the 2022 feasibility study, it would certainly suggest that we're going to have excess cash. And so we will do our normal corporate analysis on that. Are there ways that we can grow the business that make sense? Are there ways that we can go through M&A and grow the business? Should we look at share buybacks or should we look at dividends? But those decisions are a little ways down the road. We certainly think about them and get pretty excited about them, but we're going to stay pretty focused on financing and construction here for the next little while.
Thanks, Mark. And this next question, I think you touched on a little bit of this a moment ago, but can we expect more material news on scandium and scandium aluminum alloys this year? And for example, 2 methods, offtakes, and/or additional partnerships?
Yeah, I mean, Scott, why don't I have you talk about your expectations for the metal, because I think that's November. I think that we could probably have some announcements there, and then I'll pick up after that.
Sure, Mark. We have kicked off a program with 2 companies, Nanoscale Powders and Creative Engineers, to produce scandium metal. This is a different method than making a master alloy. It's a little bit trickier because scandium is a very reactive element as a metal, and generally you have to keep it away from water and from oxygen so that it doesn't oxidize. But we have a mechanism for doing that. We will be starting the test work associated with that here in November. The expectation is we'll start at a few tens of grams, ramp that up to a few hundreds of grams. And I think the exciting part of this is that there are customers here in the United States that would like to have a supply of scandium metal. There's a very few places in the world you can get that. And if we're successful in these undertakings and the test work, that's something that we might think about as an early activity as part of our overall effort to develop the Elk Creek project.
Great, Scott. And then if we kind of think about the supply chain that we've talked about already, where we can produce the oxides, produce the metal, produce the master alloy, produce the alloy, the next steps are pretty interesting. We think the additive manufacturing world probably has a pretty good jump start on their capabilities in terms of the activities that need to occur for them to be successful downstream of producing the actual alloy itself. But there's some other areas where we think some additional development is going to have to occur, because you could actually put the scandium aluminum alloy, the 0.1 or the 0.2%, in a billet form. You could then, cut the billet into pieces and machine those discs into the finished, product shape that, or part shape that a company would want. Or we just showed that we could produce the aluminum scandium alloy at IBC, and you could remelt that material and put it into a casting business to make a near net shape part. So there's a couple of other pieces of the downstream supply chain that we're looking at and we're very interested in. We want to make sure that everything that needs to be done in that scandium supply chain is done, and I think we're well on our way. But you can see there's some little pieces that we think would be just as important to put into place, and we have actions occurring in each of those areas.
Thank you. And our next question, Trump has been dealing with and taking stakes in lots of critical mineral companies lately. Thoughts on the likelihood of an incoming deal in the rare earth space?
That's speculation at best, Paul. So I'm gonna limit our answers in their entirety on that grounds. Just suffice it to say that we are in talking to the federal government at many different levels. Many different levels of the federal government know about our project and the multiple critical strategic minerals that we'll be producing. So we are part of the process, and I'll just leave it at that right now.
Thank you, Mark. And our next question, given the rapid growth of hyperscale and AI data centers, how has NioCorp positioned its critical minerals like niobium and scandium to meet demand for high performance materials used in cooling systems, power infrastructure, and advanced alloys in data center construction?
Well, I think it all boils down to we've got to be able to put the company in a position where we're producing these minerals and then have the flexibility to take, the basic forms of each of the products that we're making and have flexibility to go into other types of these products. So, niobium would be a very good example where, we're primarily focused on ferroniobium, which is where over 90% of the niobium goes in terms of sales, and that all goes into the steel industry. But there's a really, really nice business to be had there in terms of metal, niobium metal, and niobium pentoxide, or the high purity niobium pentoxide. And that's where you start getting into the AI and data center activities, is when you get into those higher purity oxide forms and the different areas that each of them utilize. Same thing for scandium, same thing for the magnetic rare earths. It's a matter of producing them, and or there's a place to sell them. And we love the higher tech applications because they do tend to like the higher purity materials. As a general rule, that gives us a higher margin on our materials.
Mark, if I could add to that,
Yeah.
one thing specifically about data centers, and those that are serving the AI infrastructure, those chips tend to run very, very hot. And what we're hearing about is designs that involve dysprosium metal, which is one of the metals that can handle those high temperatures. So certainly we will be well positioned to serve that business, as we'll be producing a high purity and fully separated dysprosium oxide product.
Great point, Scott.
Thank you, gentlemen. And we are running up towards the end of our allotted time, so this will be our final question. But what top 3 catalysts should investors watch into year end and early 2026 that you believe the market is underappreciating?
Well, I'll take a first shot at that, but Scott, would love your opinions as well. I think, the finished geology work, the results of the drilling is going to be well received by the market. I think the finished work for the feasibility study is going to be well received by the market, including the updated economic model. So those are 2 very big catalysts. I think additional offtake agreements being disclosed will also be very big for the company and well received by the market. And then just the normal activities of continuing with our fundraising efforts, continuing to do our fundraising efforts with all the right trends in mind. And ultimately, again, I'll repeat it, but I think it'll be one of the biggest newsworthy events we have in the history of the company when we get to announce something binding from EXIM. But we've got work to do in that regard. It's not going to be tomorrow, but we are very confident in our ability to get to the finish line.
Maybe I'll add to that, Mark. You continue to push my team and myself to deploy the capital that we've raised here very successfully in 2025. And I'm working with our engineering and construction partners to do that. So I think investors can look forward to some things happening on the ground at the Elk Creek project here in the near future.
Yeah, excellent point, Scott.
Great. Well, thank you, gentlemen. For our audience, for more information about NioCorp, please call us here at RedChip at 1-800-RedChip, or you can email us at NB, that's the ticker symbol, NB at redchip.com. You can also visit RedChip's investor information page for NioCorp. It's NioCorpinfo.com. There you can view and download the investor presentation and fact sheet and sign up for news alerts as well. And with that, I want to thank you, gentlemen, for joining us today, and thank our audience for joining us as well.
Thank you, Paul. It's our pleasure.